Hey, hi there. Welcome to Stock Talks with Aakash. So today we'll be learning all about price to earnings ratio. So let's get started. So what is price to earnings? Price to earnings is nothing but a valuation metric. Okay? So it tells you how much are you willing to pay for 1 rupees of earnings of the company. Okay? To put it simply, it is how many times are you willing to pay for the current year earnings to acquire one share of the company. Okay? How it is calculated? It is calculated by market price per share by earnings per share. How will you calculate market price? It's just the current market price. It fluctuates second by second, current market price. And divided by it is earning per share. How do you calculate earning per share is nothing but PAT, profit after tax, divided by number of shares. It's number of, by the way, just okay, number of shares. PAT, you can get it from the annual report or quarterly earnings. Number of shares, you can get it from NSE website, BSE website, and also from the annual report. So this is all how we calculate it. Don't need to calculate it. It's readily available and on the websites. You can rely on that. So let's go with the interpretation. So it's generally speaking, by the way, don't go here. It's not written on stones that 50 plus is high, okay? It's not that. So there is no rule that 50 is high or 10 is low. It's just a general thumb rule, okay? So what does high PE ratio tells you? First of all, I will tell you what is meant by high, okay? Let's suppose you got to know that it's high. The high PE ratio tells you two things, okay? So either the company is doing very good, okay? The company is doing very good and the people are ready to pay 50 times and more of its earnings to acquire a share. Or either it could be a bubble and it could burst anytime and the price could go down. Okay, so high we have done. Let's say you have interpreted and it is low. Okay, it was high. Now, if it is low, either way, either the company is not doing good, okay, or it is cheap, or you can say trading at a discount, right? So, not doing good is that maybe the company is in losses, not losses, because in losses, the price to earnings cannot be calculated. Maybe the company is not doing good as it used to be. Okay. And cheap is the company is doing really well. However, for some reason, its price, the people are not ready to pay that much. Okay. So we have done this and we have done this. Let's go to the next thing. Okay. How will you interpret it? So I thought I have just told you that how will you get know that it is high? Okay. So there are few measures. So you have to like if it is 50, price to earnings is 50, how will you say that 50 is high or 50 is low? You have to compare it with someone. Then you will get to know, right? To to whom you can compare it with? You can compare it with its industry peers, the companies, its competitors, right? With itself, historical price to earnings, or with a large market, let's say Nifty or Sensex. You can compare it with that. Okay, now let's go. Can cautions. Okay, so while interpreting the price to earnings, you have to be really cautious. Okay, the earn price to earnings can be manipulated by, you know, accounting manipulations. So because it involves earnings, so in earnings could be manipulated as well. So it's not a sole indicator. However, it's an indicator that you can use at the end of your analysis to make an entry or to make an exit from a share. Okay. It is meaningless for loss-making companies. I've already told you that. And yes, this thing. So it's different for different companies. So tech companies usually have a higher price to earnings, and the companies which are into materials or raw materials tend to have a very low margin and very low price to earnings. Okay, it's different for different companies. That's why I've told you to compare it with its industry peers, right? So, let me show you an example. Okay, how will you go about it? So, let's take an example. Okay, so I will show you an example of Siemens. So I am using Tijori website, okay, because my broker is Zerodha and it's linked to Tijori, so why not? And it is a very good website. So here you could see, let me go here. Price to earnings is 44.59. So by 44.59, how do you get to know that is it expensive or is it cheap? By 44.59, you cannot guess, right? So now what you need to do is compare it with either itself or with its industry peers, right? So let me just take you to price to earnings. I think it would be above, right? So you have to go to the price chart. Now we don't want price chart, right? We want valuation. And here it is price to earnings is selected. So on the top, if you could see, it was 44.59. How will you interpret it? So median is 95, like, and for a period of 1 year. I'm I'm considering for the period of 1 year, and you can select as per your need or as per your analysis. The For the median of a period of 5 years, consecutive 5 years, it's on an average price to earnings it was 74 times. Right now it's how much? It's 44. So with this interpretation, it is what? It is cheap, right? Now we have compared it with itself. Let's compare it with industry. Okay. Let me just. Okay. So we are here on Grow website. So if you could see 44.59, right? It's the current price to earnings is 44.59. And when we compare it with its industry, its competitors as a whole, then it's cheap. Like, let's compare 44 is less than. So it's what? It's cheap, right? Now let's do another thing. Let's compare it with Nifty price to earnings. How will you get to know that? Let me show you over here. Nifty 50. So if we compare it to the market, it is 22.22. And what was our 44.59, right? So 44.59, it is expensive. So it has various interpretations, and you have to just go with your theory and your interpretation of it. And lastly, I told you that for companies which are in losses, there is no price to earnings. So let me show you that very really quick. Raymond, we are at Raymond share, Raymond Lifestyle, and it is currently in losses. So if you could see, here it is price to earnings and equity 0, 0, 0, right? So when a company is in losses, price to earnings cannot be calculated because there is no earnings. When the denominator is zero, then the whole thing is null and void, right? So let's go back to our slides. It's better. And the last thing I think I've not told you. Yes, one thing was missing. So if you have noticed, it was TTM showing. What is TTM? Let me just tell you. TTM is trailing 12 months. So the earnings portion, they have considered it for the past 12 months. And there is also what is called forward price to earnings is that they take the earnings, the future projected earnings given from the management or from an respected analyst. So which is more reliable? I think it's TTM, it's more reliable. Forward, we cannot really know how much the company could earn, right? We cannot see the future. So in conclusion, to conclude this video, if it is cheap, it's just generally speaking. So these numbers are not written on stones, it's just generally speaking. If it is cheap, it could be a deep value. It could be a turnaround if the company is going down and it is just get now starting to get up, or it is just a trouble. Okay. And this for a high is a very high optimism. The people are expecting that the company will earn more and more in future, or it's just a bubble to capture your money. Okay, so that's it for this video. I hope you enjoyed it. Stay subscribed to my channel to watch more videos. Thank you for watching. Bye.
Disclaimer: the information provided is for educational and informational purposes only and should not be considered financial or investment advice. I am not a SEBI registered investment advisor or research analyst. Investing in stocks involves risk, including the potential loss of principal. Always conduct your own research and consult with a qualified financial advisor before making any investment decision. Past performance is not an indicative of future results, and all investment carry inherent uncertainties. The author and associated parties are not responsible for any financial losses resulting from the decision based on this information. This channel does not promote any form of guaranteed returns or insider tips. Always invest responsibly. Thank you.